What's going on, traders? Thanks for clicking on this video. As a friendly reminder, I am not a professional, I am not a financial advisor, and what I share here on my channel is for education and entertainment purposes only. Trading does involve risk, and risk means potential loss, so make sure to take the proper precautions when participating in the markets. Now, normally on this channel, over the past 4 weeks, we have been doing Sunday, Monday market overviews and then a midweek overview. But for this week, I really wanted to focus on some price action studies and bringing a new confirmation checklist video to you guys. So here's a recorded Zoom from a price action study this morning on GBP USD. That's New York time, around 10 p.m. is when I recorded this. Right now I'm doing a voiceover. As you can see right at the beginning of this recording, I had just entered a buy position on the pound dollar to go ahead and take this to the upside. We will be walking through all the higher time frame bias as to why I got into this trade. But for now, we're going to focus in on what I have on the screen. So we entered right around 135.93 with a stop underneath previous wicks at 35.80. So right now, I'm just showing some clean market structure markup price action from early Asian session in London and how we properly played some 50% in pre-New York as well. We got money hanging out to the upside. So that's what's really got me focused on taking this market higher. As we look down on the smaller time frames, right, we can see the fractal nature of these last down to up candles, and where our entry was right off a last down minute candle. So obviously we got to let price play out a little bit here. I'm going to back up into the higher time frames and show you guys some targets. Don't worry, we will get back into why the entry was taken where it was at, and as we look at price here, you can see over to the left, we do have a last up to down candle with some liquidity hiding above it. Now the overall 4-to-1 target is above that liquidity, but we definitely want to find somewhere where we could scale. We want to find somewhere where we could have a take profit one. So right there, I marked off the 50% of the hour candle. Now that's only at 36.09, so that's only about a 15-point take profit. So what I want to do is go down to a smaller time frame and see if we could raise that a little bit. As you can see, we got a nice 15-minute imbalance where that first take profit lied, but I like this one a lot better because now the 50% of the 15-minute candle is at 36.20, and we all know we love to play those 20 levels. So again, just giving us a little bit more upside to the market here. And I know this is pretty fast. It's in 2x speed, but I don't want to make these too long for you guys. So again, just follow along. You can rewind and rewatch whatever you need to. So here, just pointing out those candles, right, making it 36.20. That would be your proper TP1. That's for about, as you see there, it would have been about a 2-to-1 from the original stop loss area, risking about 15 pips to make about 30. Now, as I go back down into the smaller time frame, right, showing the 50% fractal nature there, the 50% fractal nature there, even though we drove down a little bit lower, overall it was respected. And we just want to wait for some volume to go ahead and get into the markets, right? I'm showing kind of the consolidation areas during Asian and London and just really allowing price to break above that 3,600 level. Go ahead and run through the little bit of liquidity hiding up there. I was just checking up on that GBP number that came out. Nothing really was telling me anything different there. We obviously saw nice bullishness going through London session. What's the dollar looking right? Because if we're bullish on GU, we'd be bearish on the dollar. Well, I see some short-term distribution going on here, right? Playing those last up to down candles. We do have this gap that price, allowed market to open at. Again, I didn't do a Sunday market overview for you guys. I wanted to let 24 hours of price action play out. So here, again, just a little pool of money hiding above where we could typically go retrace back into to continue higher, which is going to push GU up in the short term. So now finally, we start getting some more volume in the markets. And the cool thing is once you start getting this volume, this is where you can start properly, kind of moving your stop. And that's the main reason for these price action studies. I want to show you guys how to go ahead and minimize your risk as the market moves in your favor. Because right now, we're still at about a 14 pip risk to catch about 28 pips. So it's only really a 2-to-1. But as you see that volume get into the market and we break above those highs, you could take your stop from those wick lows now down to that most recent wick low at 35.90. So now you're only risking about 3 to 4 pips And that take profit up there at 36.20 is about for 27 pips. So I'm going to show you guys here. You went from a 2 to 1 as I pull this down to a 9 to 1, even a 7 to 1 ratio. So, again, 7 to 1, 9 to 1, 20 to 1, that's what you want to be looking for. Even though it started out as a 2 to 1, again, you're able to properly scale yourself as it moves in your favor. And again, if it wasn't to move in your favor, right, you take that 15 pip L for the morning and you go from there. Just moved my stop loss there. I almost went ahead and took partials, but we are going to wait till we officially move in to that take profit 1 area. We successfully, traded above that liquidity that we had there. So now we're just kind of hanging out, waiting for the market to move into that 15-minute 50% at 36.20. I do love my round numbers, so that's what we'll be looking at. As you see, we're moving into it now, so we're going to partial close, take half of our profits. Perfect. As you can see, the market just pushed through that TP1 area. Now again, why is that my TP1? Why does this area make sense? Well, again, over to the left, this is that last evidence that the institutions bought to sell. So this is where short term they could be getting out of the market. Now again, just showing you, right, we played the 50% of that last down candle. And then where I entered was, again, I'm going to show it here. Right, we had a deep retracement. Don't really worry about those, but here is where I show the 50% of that candle. We drove one down and we respected and traded up above. Kind of traded slowly. So what you want to do here is allow the market, knowing that you just took your first profit. We left an imbalance, so you got to allow the market to come down if it needs to, right? We look for those deep retracements. And this is where I'm going to go ahead and pull out kind of an Elliott wave and show you how you can move your stop loss up as the market goes ahead and continues to the upside. Because right now, it's still at a actual stop loss, right? Not in stop profit. Now, you could move it above your entry if you wanted to go risk-free, or watch what I do here with the Elliott wave, right? 0 to 1, we get that 1 to 2 pullback, 2 to 3 expansion, 3 to 4 pullback, whatever it may be. And, we would hope 4 to 5 goes up to our take profit. But what you want to do is leave your stop where it's at now, and as you make that second low, right, come test that 70%, and then we move back towards take profit 1, or maybe move back up towards, number 3, you would want to move your stop up to that next level. So here, just looking for some fractal stuff on the minute on our take profit, right? We had liquidity form, and this was New York. It looks like this was New York yesterday or last week. So again, last up candle respected, last up candle respected. And we continue moving on with the trade idea. Hopefully I'm not talking too fast for you guys. If I did this in regular speed, it'd be about a 26-minute video, and I just don't really want to do that. You guys can, go ahead and replay this and listen to me talk over and over and over again. Or, again, just pull up the 15-minute, 5-minute chart on your own and walk through exactly what I'm walking through here. So, as you see, we effectively have traded through take profit 1. We've already taken some risk off the table. Again, you're more than welcome to move your stop up above entry if you need to. I am going to break down what went on and do some higher time frame work here real quick. So there was one trade idea that played out on Monday if you would have been looking for it. Again, as we see here, we had a big pool of liquidity from last week. The market opened, and allowing candles to play out Sunday, right? The market traded through that liquidity. Now, we reached that imbalance very early on during Asian session, so you don't want to touch that. So what's the next area that you want to look for? Is there anything up above those lows? Well, there is one area, little imbalance there, and that's where you see we respected at 9:10 a.m. yesterday morning. And that's where the bullishness of this market is coming from. So now we're going to break down the bullish markup on this structure, right? So as you see, market opens, and we trade all the way down into that area right around 34.50. And what do we do before we take off from 34.50, right? They create those lows where most of those retail buyers are trying to take the market to the upside because it's already dropped 100 pips to start the week. As we see some nice clean tests on the 50% in open of that last down candle that breached liquidity to the left. We had a break of structure as the market moved higher. Now again, did the market retrace deep for us to get that, perfect deep retracement entry? No, but we were making higher lows this entire time. As you see, again, playing off the open in the 50% of all these candles. That's what I'm pointing out on these black lines, right? Last down candle, move up, we traded higher, and that's what happened. Again, a lot of people took advantage of some London and early Asian setups for this buy position. I decided to wait till New York and kind of see what the market was showing me there. Again, even on a smaller time frame, you can see the fractal nature, right? I'm kind of cleaning the charts up a little bit and see how equal that money is right there. They got all the buyers in there at the bottom, so you wait for them to drive below it right there on that candle, right? And then wait for them to trade above, and then maybe your entries are coming right there, right around that 11 o'clock area the next morning. And then again, same thing for late New York / Asian session here, right? You had those higher lows be made. We had one last drop into that down candle right there. And again, ultimately just trading higher. And we didn't quite get that test there. But again, just overall markup structure. You don't always have to have reaccumulation happening perfectly as the market's moving up. And then, again, as you see, we effectively traded up through that take profit one area, and now we're pretty much just waiting. There's not going to be a whole lot more to this recording over the next 2 minutes. I ended this before market reaches up to that 36.50 area. Again, I want to keep these short, but either way, taking this into take profit one and still knowing that we have this liquidity to the upside, we have this 50% to the upside at that half level of 36.50. That's where you overall want to be targeting for a longer term trade to be holding. But luckily with this trade this morning, we were able to move into take profit one pretty quickly, pretty swiftly. Just taking a look at the DXY, right? Just seeing that evidence of the bearish dollar, right? Last week we played really well off these areas that I'm going to go ahead and clean up for us here. So again, looking for some higher prices on the dollar index this week. I'd say we have that 1 hour 50% that almost got touched. Got some liquidity hiding above that, and then 91.50 is overall my target to the upside when it comes to the dollar index for this week. So again, it's not by accident that we're hanging out around take profit one, right? It's a high, it's a high probability area. So what do they have to do? They have to reaccumulate or reconsolidate and stack up all those extra sellers, those buyers trying to get in the market now that were too late to the party or are trying to sell this market off. So again, they're going to hang out here for a little bit, figure out what they want to do. Again, we know that we have to allow them to trade down if they want. They effectively took that pool of money there. And again, this is pretty much it. As you see, again, just hanging out. If you took from high to low, they're making money at that 50%. So if they wanted to trade higher, they can. If they want to come dip down into those deeper retracements, they can. It's all fractal. You just wait for what you want to see and you enter from there. But I appreciate you guys for checking out this video. Smash that like button, and I'm looking forward to another price action study later this week.